Yeah, hello, my YouTube community. Welcome back to Soft Talk FX Academy with Mr. Walls. Trust you're having a good day. Okay, now this video is going to be about my strategy. That's DHL strategy. That is daily highs and lows. Daily highs and lows strategy. So one of the things you have to consider before you trade this strategy is you must be very big in market structure. That means you must have a very good understanding of market structure. Apart from that, there's a particular what's it called tool that I make use of, which is session separator. If you look at my chart, you'll see a series of vertical lines on my chart. And you first and foremost, you have to bring that out. This is MetaTrader 5. So you right click on your chart, you go to properties, then you see among the list, you see show period separator. I already have it on. That's why you see the click on it. Then you press OK and it will come up. Sorry. So if you are making use of trading view, I think it's there as a session separator or depending on the platform where that you are making use of. So like I said, you have to be very big on market structure when it comes to this strategy. And this strategy is simply a day trading strategy. You take your trade that day, you take your profit that day. You can also use it to swing the market depending on your intentions. But if you want to use it to swing the market, I advise you go and use it on a 4 hours time frame. But on a 15 minutes time frame, you get a very good intraday move and you get a trade early. I mean, when the daily candle is open, that's when you get the trade before it's too late. And you catch a very good pips, you're out of the market for the day. So let's get into this. Let's get into this because I want to show you how to use it on several pairs. Now, what you do, first and foremost, what you do is you identify your previous day high and low. Okay, now this period separator simply signify a 24 hours period. The price action that took place within a 24 hours period. That's what this session separator is actually indicated on the chart. So on a 15 minutes time frame, this is the price action that took place within a 24 hours period. If you go to your daily time frame, this will be depicted in a single candle, but this is a 15 minutes time frame. This is the price action that took place within the 24 hours of this period. So what you want to be doing is you mark the highest point price traded to that day and you extend it to the next day. You mark the highest point, which is here, and the lowest point. You mark it like this. So what are you expecting to happen? The next day, this is our trading day that we want to trade. We are expecting a breakout of this range. And you know something good about this strategy, you can use it as a support and resistance. But for the sake of my smart money followers that doesn't want to hear support and resistance, you can as well use it as a range, your trading range, your trading range. So when price is out of it, price is actually telling you, oh, I want to go in this direction. So look at what happened the next day. This is the previous day that we are talking about that will mark the high and the low. So to see the next day, price traded up, you know, came back into the range of yesterday. Then eventually we have a breakout of the previous day range or of the previous day high. We have a breakout of it here. And look at what has happened. I told you it can be used as a support and resistance. Price broke out of it, returned. This is a form of retest. Sometimes you have a perfect retest, sometimes they come close and move. And this is where you would have gotten your trade. On the next day, when a new candle is just opening, you would have gotten your buy trade and buy and hold the buy throughout the day. Throughout the day, because this is where a new candle is opening. You would have gotten it and hold the buy throughout the day. And If you are making use of your Fibonacci tool, because this strategy, basically, I use my Fibonacci tool for it. So basically, if you slap your Fibonacci tool on it, it didn't give us a perfect entry because it didn't come into my 62%. You know, I like to trade below 50%. I like to trade below 50%. That's my discount zone. So it didn't come perfectly into it. It didn't come perfectly into it, but I would have still taken this trade because I look at other parameters as well. This is a perfect break retest. Then I take my trade. So, but if you want to still go in with a confirmation, you are not taking it after break and retest because it doesn't come into your 62% or below. This is another point you would have gotten this very, very good trade. You take your Fibonacci. This is a short-term structure break. This is a short-term structure break here. Then you take your Fibonacci tool, you slap it on. This is a perfect entry for us. Then you take your trade to the upside. Bam. So if you don't know how to use your Fibonacci before now, I have a detailed video on this channel that talks about Fibonacci. Please go there, watch it, and have a very good understanding of Fibonacci. And if you don't really understand market structure as well, we have a 1 hour or plus video that talked about market structure on this channel. Do well to watch it as well in order to have a very good understanding of market structure and how to apply it. So now you cut this trade. So what do we do? The next, what do we do? We mark the high and the low of that very day. We mark the high and the low again. Then we wait for price action. See, price created this high, then created this low in this particular day. And what did you see happening? Price, you can see that price is already giving us a bearish structure. And the next day opened, price refused to break the high of the previous day. You know this is the previous day, right? Because this is the day in which you want to trade. This is the previous day, price refused to break the high of the previous day. And look at what has happened there. It has already given us a bearish structure. This is a break of structure. If you understand like that, like I said, you have to understand market structure. A break of structure, and you see price coming to mitigate this area severally. And what did you eventually see? Push to the downside. So if you are the type that doesn't understand the smart money concept, fine, just bring out your Fibonacci tool. You flip it on the chart. Then this is a perfect entry. You take your trade and you hold your trade. Look at how you would have gotten into this trade. And let me show you what time of the day is this. Where's my, okay. I just want to show you this time. Look at it. That's just I think, okay, around 8 a.m. you would have gotten your trade and gotten this very good move out of the market. You would have gotten that very good move out of the market. And immediately you notice there that the previous day low got broken. Then that's an assurance that the price wants to go lower. It wants to go deeper. And look at what happened there. A break and retest. A break and retest of previous day's high. And price, you have another trade here as well. You have another trade there. Let me just show you different scenario. You bring out your Fibonacci, you slap it on. Very, very perfect entry. You take your trade. Like I told you, this is an intraday strategy. You don't have to go a long time with the market. This is an intraday strategy. So what I do is my stop loss is always at 100%. This 100% or slightly above it. And my first target point is going to be the 0 point. Then depend, I use other parameters from my take profit, I use liquidity area, I use all that. And for those that understand the way I trade too, if you're not using a Fibonacci, this is a swap zone. This is a swap zone where what's it called? Demand turn supply. Demand turn supply. But let's leave that. Let's just stick to our Fibonacci entry. You flip on your Fibonacci, you cut your trade, and you are good. You are good. Then what do you do the next day? You mark the high the high point of this day and the lowest point that price traded to in this particular day. And what are you waiting for? You're waiting for price action. You're waiting for price action, guys. This strategy is just too simple. You're waiting for price action. And look at what happened. Price, this is a kind of fake, that's what some people call fake out, but to me, this is a liquidity grab. Price grab liquidity below yesterday's lowest point. Price grab liquidity, we eventually have a break of structure. We eventually have a break of structure happen here. And where's my Fibonacci tool again? Fibonacci retracement tool. Okay. You slap it on, guys, perfectly. Price returned into our 62% and below our discount level. You get this trade and you're out. You're good. You break even. And if you didn't break even on time, it will come back and probably take you out on your stop loss. It will probably come back, take you out on your stop loss. It will take you out on your stop loss. So what do you do again? What do you do again, guys? You mark your lowest point and your highest point of the day and extend it into the next day. The market, extend it into the next day. And look at what happened there. Price traded to this place and look at a very good move to the upside. Look at a very good move to the upside. So immediately price traded there and refused to break the previous day's low. I know that price is going up higher. I would have taken my trade. But if you are waiting for extra piece of confirmation, look at a short-term structure break. Let me show you. Look at a short-term structure break. A short-term structure break, your Fibonacci, then another good trade to the upside. And you would have been holding this trade throughout this very day. You would have been holding this trade throughout this very day. And let me show you another dimension to this trade. Another dimension. See, this is a liquidity engineered down here. So price return to take this liquidity and up she goes. So you take this trade and you are good. You are fine, guys. So one thing about this daily highs and low strategies, you know, uh, you can use it for support and resistance. You can use it as your trading range, which I use it for all that. And I used to tell my students that, see, when it comes to forex, we teach you the principles, we teach you everything, we hold you by the hand, we show you things, but the journey of forex is a lonely one. It's a journey of self-discovery. After learning all those principles, you have to discover yourself. You have to discover things on your own. You have to find your winning edge. If you realize, not too many people out there trade daily highs and lows. I've only seen a guy trading daily highs and lows, and I give it to that guy. He knows what he's doing as well. That's Trader Hex. I give it to him. This is a working strategy that has there's no strategy that has 100%, but at least this strategy so far gives up to 80% or if not more of winning rate. And very simple intraday strategy. You take your trade, you're out of the market. You're out of the market. So let's mark this high and low of this particular day as well and see what happens. Let's mark it. Okay. So price created this high, this low, and look at what happened there. Look at what happened there. Price has been creating lower highs, lower highs, lower highs, lower low. This is a short-term break of structure. Short-term break of structure. Where's my Fibonacci tool? Slap on my Fibonacci tool. Look at perfect entry. So what I do is I go in with about three orders, depending on what your account can carry. We don't run the same account size. I put my first order on 62%, 17.5% and 79%. Then my stop loss will be somewhere around there or above it. And my first take profit point is going to be this point where I leave my where I leave after taking my partials, then I leave order to run. So look at it, you would have gotten this trade all the way from here and write it down. And immediately you notice that yesterday's high got broken. then you know price is about to go down. And look at what happened. I've caught this trade and sold all the way down, all the way down. So what do you do again, guys? Very simple. You mark the highest point of the previous day, the lowest point, then you extend it to the next day. This is the day that we are trading now. So price consolidated all day, consolidated all day. Something about the strategy is, you have to act like a sniper. You know what a sniper is? You watch all those action movies out there. A sniper doesn't engage in confrontations every now and then. You see a sniper on the rooftop waiting for his target to come into range. So in this day, we are not trading. We are lying down on the rooftop. We are waiting for our target to come into range. We are waiting for our target to come into range because we don't have a good price action here. Like I told you, this strategy is best used on a trending market. On a trending market, not on a consolidation market. This market is consolidation, is on consolidation here. So this is a great day for us. We are not trading. Are just watching the market. And if you are the type that trades several pairs, you would have gotten your trade on another pair. But me, I like to trade mostly. I like to trade VIX 75. I like to trade VIX 75. So on this day, I would have just sit back, sipping my drink, and not taking any trade. I would I would have relaxed, not taking any trade. But what happened? Let me mark my eye. Let me mark my high of the day and low of this very day and see what happened the next day. Look at what happened the next day. Price traded below here. Price traded below here, took all the liquidity below here. And what did we have? A short-term price structure break. Where's my Fibonacci 2? Would have gotten this trade. I've gotten this trade to the upside. I told you this is my first profit target, and look at it, came into it. I would have broken even before price will descend down. But if you fail to break even in time, it would have taken you out on stop loss. So I like the fact that this strategy is a very practical one. I'm not just showing you win, 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 win. It's a very practical one. So the next day, I would have marked my levels. I've marked my levels, my daily highs and daily lows. I would have marked it. I would have marked it. I would have marked it. Then wait for a breakout. You have a breakout here. If you bring out your Fibonacci here, this would have taken us out on stop loss. This would have taken us out on stop loss because price eventually came back down. But I will show you another dimension to this. Look at what happened here. This is actually a liquidity graph. For those that are new to me or are new to this channel, I'm a price action trader with a smart money blend. So don't be surprised you hear me talking about smart money the next time I'm talking about another thing. I combine the two. Especially nowadays, I trade my daily highs and low. I use it to confirm my smart money move. So price took out liquidity, and after taking out of liquidity, what's the next? Price will retrace, and you would have gotten your trade there. But if you don't understand smart money, don't worry. If it's price action, you understand. I would have gotten this sell because I told you this daily highs and lows can be used as a support and resistance. So I have price giving me head and shoulder. These are the shoulders. This is the head on a resistance area. So I would have gotten on this trade, and I would have gotten on this trade, and look at it. Take a very good sell to the downside. A very good sell to the downside. A very good sell to the downside. And if you didn't get that, assuming you didn't get that, this is a short-term structure break. Short-term structure break. You bring out your Fibonacci 2. Let's see if it's going to come into our entry. Perfect. Perfect, guys. 62%. It tapped into our 62%. That means this particular trade would have triggered one of our orders, because I told you I used 3 orders, 62, 70.5, and 79, to have triggered one and you know, a very good trade. Even with the least lot size on VIX 75, you sold all through the day. This move would have given you probably up to $50 on the list of lot size. So you take your trade and you are good to go. You are good to go. So you keep on repeating this on on a day-by-day basis. Let me show you another pair. Let me show you so that you won't think it only works on volatility 75. Let me show you this on almighty what's it called, almighty V100. Let me show you this on almighty V100. That very volatile pair, man. Okay, that very volatile pair. So let me take out this so that it won't distract us. Okay, let me start from here. One more. Let me start from, let me bring out, let me mark my highest point. Highest point, I extend it into the next day, and my lowest point. My lowest point. So what happened there? The day closed on this level, then the very next day, you see price shooting up. This is a very aggressive move. You might have missed this move, but if you're an aggressive trader too, maybe you get it. But you know, immediately we have a break of structure, price didn't even return. So probably you might miss this trade or be able to get it. But this is another place you would have gotten a very good trade. We have a short-term structure break, and this is where you'd have made use of your fib too. So it came close to your stop loss, but this very move on what's it called, on V100 would have given you a whole lot, a whole lot. So that's how to trade when it comes to daily highs and low strategy. Let me show you on another pair. Let me show you on V10. Let me show you this on V10. Actually, I would advise you guys to do your own personal back test and you know, develop a confidence about the on this around this strategy. Do your own back test, then build your confidence on this strategy. Look at this very day. This is the high and low of this day. What happened there? A new day opened, then it broke. It didn't give us a retest. Then let me see if you get an entry on this. If you didn't get an entry, then there are days you won't get an entry, guys. I won't tell you every day you keep on getting entries. So let me move it. Let me mark the daily high and the daily low here as well. Then okay, look at what happened there. We have a break of, the next day gave us a break, then price traded above it. And what did you see? Eventually price descend down, came back into the range, and price start going down. Price start going down. So let me bring out my Fibonacci tool. Maybe it's going to give us an entry here. Okay, my Fib tool. Oh, perfect, perfect, guys. Guys, see this one. Perfect. And you will have gotten this sell. I've gotten yourself from here, and you'll be Gucci. So for you to know this thing actually works, let me show you on GBP USD as well. I want to show you on GBP USD. Let me show you on GBP USD. Okay. Okay, so this GBP USD, this is a trade I took this particular trade. I took this particular trade. Look at this place. We have the high of this day. We have the low of this day. We have the high of this day, the low of this day. So price actually opened the next day, traded back into this high, couldn't break this high. And what did you have here? A break of structure to the downside. I actually took this sell all the way from here. I took it, I posted it on our Telegram channel. I posted it before I got into it. So I took this trade. Price descended to the low of the previous day. You can see the low of the previous day. But what I was expecting is these equal lows. I was expecting price to take out these equal lows. You can see I have a buy limit order here. I was expecting price to trade below here, and in order to take my buy to the upside, but that didn't happen. That didn't happen. So I missed this trade. That's why you still have this buy order here, and price has traded up. But with your Fibonacci tool, because you have a price structure break here, with your Fibonacci to look at what happened, price traded back into our premium zone. I didn't see this one in time. I would have taken this sell again after taking, let me show you how many pips this one actually gave me. Let me show you how many pips. Assuming I took it from here. That's about over 100 pips. That's about 122 pips. I've gotten 122 pips. And if this one plays out fine, you can see it's already reacted in the premium zone. If it plays out well as well, it won't give you anything below 50 pips to the downside. Because price will eventually come here. That's why price actually preserve this place in order to actually come back for it and root it out, because this is a liquidity area. So I'm expecting price to come on GBP USD, root out this area, root out this area. So let me show you the number of pips, even if you traded to that double bottom liquidity area. I've gotten your trade all the way from here, and bam, that's a 94 pips move. So in a day, within few days, you can get yourself 100 plus move when it comes to GBP USD trading daily highs and low strategy. So if you are coming across our channel for the first time, do well to click the follow button, turn on the notification bell, click the like button, so that whenever we drop educational videos like this, you'll be the first to to be notified, and you'll be the first to watch it. And if you want to be part of our free Telegram channel, free analysis, free trade signals, do well to click the link in the description box, which will take you all the way there. If you want to talk to me on a one-on-one basis, you want to access our mentorship, when you get to the Telegram group, you have my personal handle, Telegram handle, then you chat me up. Please be guided. Don't let anybody, scam you, because there are so many scammers out there acting as soft talk effect or any other person. Please make sure you get the right link on our pages, and make sure you get the right handle on our Telegram channel. So go and do a back test of this strategy, put it into use, practice it, perfect it. And you can do your own personal research and even upgrade this and use it, use it to suit yourself. So it all boils down to you. So see you some other times. I'll be leaving you on this note. See you some other times. Thank you for believing in us. We appreciate you guys out there. Peace.